to the Stock Market Morning Prep video for Monday, June 16th. Hope all of the fathers out there enjoyed their day yesterday. It was a beautiful day here out on the East Coast. So I hope everybody really enjoyed a little bit of relaxation, and the dads didn't do much of anything other than relax, maybe a little barbecue, cocktail in the hand. So that's great. I hope everybody did do that yesterday. We are back to the markets this morning, and we had some geopolitical tensions that continue to escalate over the weekend. We had, I believe it was a cargo plane that got shot down by pro-Russian rebels over the weekend, killed 49 people, so that was pretty devastating. Then we have the tensions in Iraq starting to escalate. Now we hear Iran is sending in their troops, so it's going to be a pretty big mess here. So I think what we really need to be careful here and watch what's going to happen. It is obviously going to affect our markets. We have crude oil right now trading at 107, up about 10 cents. So it had an explosive move the last several days, as you know, because of the tensions that are escalating. And we did hit a 1272 extension, as you can see. So I always say never short crude oil because there's always ongoing tensions in the Middle East, and it's always to be a better buyer than a seller. Now, as we can see here, obviously it is extended. I would not be looking to buy crude oil here. I'll be waiting for some really good pullbacks back into areas of support. But again, this does affect. It's like an automatic stimulus package that just was removed from the markets. When crude was trading at 91, even 97, under 100 on the par. People are still out there. And we talk about the majority here. We out there spending. Money is a little bit easier. But when you have gasoline prices start to hike, and they will, really good spike up higher, people stop spending. In a sense, why? Because they don't drive. They're not going to the malls. They're not going to visit grandma. They're not going, on staycations and what have you. Going into the summer, it just kind of puts a halt on moving money into the flow of the markets, and that's not a good sign. And obviously, the transportation sector gets hit, like I mentioned. Weeks back, and we'll talk about that going on into the charts. So really, really interesting developments over the weekend. So I would not say go out and short the market. Obviously, shorting the market is not a good thing to do, especially the way the markets have been of late. Especially you had markets well bid up. But can this be a game changer? Absolutely, and the reason why is because this could be a catalyst. We really haven't had a catalyst of why to sell the markets. Why do I want to sell the markets for when the government continues to put money into the market? So this could be pretty much of a game changer, maybe taking some profits. So just a quick heads up, guys. Keep it light. I would keep the book light. And if you do have a lot of longs and or shorts, and I would just protect yourself with maybe some cheap options. And they are still cheap, some puts. Okay, so we have 30-year. As you can see here, we are back up to the 100. I'm looking at that 1272 extension again. We hit it twice, and I'm looking for the bigger picture would be the 1618, which would be that head and shoulders that we identified months ago, which this is the left shoulder head and the right shoulder here. Slanted neckline was broken. That coincides nicely with this spot to this low, right up in here to 1618. So that's the overall bigger picture. I do think bonds are in a short squeeze, and eventually they will go. The overall picture in bonds is really lower, but with tensions that are escalating, obviously, we're looking for flight to safety. Where do you put your money? Bonds, utilities, obviously one of those REITs, high-yielding ETFs even. You could go into the consumer staples, and that's what's been really bid up as well. So, just a word of caution. You got to be careful. Friday we had a little bit of a rally here. This was Friday's action. This is this morning. We're down about 6.5 handles. So as you can see here, it is affecting, or at least in the early morning session. When the futures opened up last night, Sunday night at 6 o'clock, we were down 775. So it definitely had some notification about what was going on for the weekend. And it could continue. I mean, obviously, we only had a couple of days. I mean, the last couple of days prior to Friday, Thursday was a big day. And Wednesday was okay, but wasn't anything great. And I still didn't even see any fear in the marketplace coming up. And then we did have that reversal, that spike up Friday. I did mention in the video, Friday, in the summer usually is bullish. Light volume markets tend to go higher. You never short a dull market, quote unquote, and usually is true. And it did hold well. And I was absolutely even surprised. It was very, very slow, first of all, but I was surprised that even given what's going on with Iraq and Ukraine, and I'm surprised that it would even close positive, because I would think that if you had a big size position and you were long the market, why would you hold into a weekend, going into Monday? And that's what may fuel another sell-off today. People being just overly long here, not loosening up the positions from Friday. But anyway, that's something to watch out for. Diamonds, as you can see, Dow Jones ETF, we hit that 1272 extension. We're looking for the 1618 right now, and really, there's nothing wrong with any of these charts. Okay, I just want to make that clear. Other than up 14, 13, 14 days, now we're starting to unwind that overbought reading. And remember, there's a lot of support. They all look the same: 20, 34, 50. Got 200 way down here, but you have a lot of support in these areas. So it's going to take a lot to break down. But I did mention that if we do start to escalate to the downside, my really target is about 1895, 1900 in the ES, which I've already mentioned on Friday. Transports, well, they're going to get hit, and we mentioned before that this here is unsustainable. And then we just shot up even more. We hit the upper end of this uptrend channel, and now we sold off. So this is definitely the weakest. Now watch this, because this is the leader of the 5 that we follow, the indices that we follow. So we start to break down a little bit more, we could really escalate, and this could take down the rest of the indexes as well. Okay, but again, with crude oil prices moving higher, and at extensions in the transports, it's only logical that they would pull back. And sure enough, we had a nice 3-day pullback, and then we bounced on Friday. Okay, and then we had the IWMs here, again, really doing nothing wrong, creating another bull flag like this previous bull flag, breaking out higher. We have that 61.8% retracement, which is that golden ratio that we're looking for, excuse me, for that key reversal. And let's see if it reverses. Right now, it looks like a bull flag, really nothing wrong. And if it does break out of this bull flag, I think it'll challenge the highs here. At least challenge the highs. You have the 1272 extension up in these areas, okay? And then lastly is going to be the Qs. Pretty much the same. Qs were well bid up on Friday. They did close a little bit lower, but really they're pretty much holding in there. A lot of high beta names doing okay. So this market's really tough to really want to, if you want to get short. Logic has it, but you know what? Logic doesn't pay us. We want to get paid. Let's see what price does, and then let's react to price, okay? All right, guys, have a great day. It'll be an interesting day today. I do see a really a bigger move to come here in the next few weeks, and especially when you have, with these tensions really starting to escalate, I think there's just, what's going to happen is the cards is going to have a summer sell-off. We were all looking for that all through the winter and spring months, and that never materialized. And it's only going to be a matter of time before something pushes the button and say, okay, we're done with this, we're going to start selling. So again, you have to have that in the back of your mind, and it's nice to see that the markets at least sell off a little bit. I mean, when you have markets running up like this, it's not healthy for the markets. So when they do pull in a little bit and they absorb that, they unwind that overbought reading, that's when you really get excited about it, because then you can really start looking for quality setups. And it's going to happen. It's just a cycle. All right, guys, have a great day. We'll speak to you tomorrow. Take care.